Well, the escalating Russia-Ukraine war has also raised global concerns, with the commodity market inching up at a record pace. Supply fears loom large. Global oil prices surged to $139 per barrel. This is close to the all-time high, which is $147 per barrel. That was in 2008. Now, this even as the U.S. signals banning the import of Russian oil and natural gas. Gold prices also breaching $2,000 mark as investors rush towards safe havens. Copper prices also soared to an all-time high of $5 per pound. All of this as the rupee hit a lifetime low as it slumped 76.96 against the US dollar. But to put a little bit more perspective and understand the India impact a little bit more, Professor Gulshan Sachdeva, European Studies expert at JNU, is joining us here on the broadcast. Professor, thank you so much for speaking to us here on Mirror Now. There are a whole host of concerns, with regard to this impact of this war at this point in time. But focusing a little bit on India, because so far, even though we've been seeing oil prices spike, there hasn't been any change in the fuel prices here in India. That is likely to change. Your own estimation or perspective on how much of an impact are we likely to see once these elections are over? Counting day, of course, coming up now on the 10th.
Well, all these sanctions, what you can see, they were not designed to hurt energy trade. But what we are seeing now is, as your report you have mentioned, there is total uncertainty. And at the same time, there is self-sanctioning by so many firms. Companies, those who are... Nobody wants to really deal now with the Russian assets. Nobody wants to deal with the Russian companies, or the freight companies, or you're looking at insurance companies. So as a result, there is a possibility that, you have a disruption in oil production, as well as also in exports in the Russian market. So this is clearly, we have since we import about 80-85% of our imports from outside oil. So this is going to impact us. Although we don't import much from Russia, but if the Russian supply is disrupted, so there is a problem here. So if the prices are going up, obviously in India, what we have is, these administrative prices. So the government can hold on for a while, as particularly due to elections. But as things move in the next few days, we will see definitely hike in prices. Now, how that hike would be, that will depend on the base price, what revision of the base price would be. And of course, if the government is willing to, take some of the excise cut, which is unlikely because it's difficult, because then the budget figures will go down. Already there are problems. So then you have a fiscal deficit problem. So we are in a difficult situation, obviously. So what we can do is perhaps, since, some of the Russian oil, which is I would say non-pipe, the oil which is not going via pipelines, that could be available. So if India is able to work out some kind of bilateral mechanism, so maybe India is able to buy some price at discounted price from Russia, but that's, these are the kind of tentative arrangements India can make in the meanwhile, but we will be in a difficult phase the next few days, next few months.
Yes, absolutely, Professor. And, just also to understand a little bit on the possible scenarios that one would sort of look at this point in time with respect to India. Because like you said, we're looking at the fuel price hike that leads to a lot of other repercussions and ripple effect of that, the inflationary pressure as well, the fiscal deficit. Overall, it is not going to be a pretty picture as far as the economy in India is concerned. What is the most worrying factor or factors at this point in time, in your opinion, that we need to watch out for going forward, and how bad can it get? What would be that, point where you would say that this is the worst case scenario?
Well, we are already close to the worst case scenario, seems like. One, of course, for us, the major worrying part is the price of the oil, because, we don't import much from Russia. So the price which is going to affect, that's what the major issue for us is. And that's going to have your import bill, issue at the same time, also with the fiscal deficit, etc. What all the things, and inflationary pressure, all your growth numbers. So only thing which we can get some cushion if you're able to, get some oil somewhere at a discounted prices. So Russia, as I was saying, could be one factor, but definitely this is, we are going to have for a rough period. This is quite clear now. But, the major, my feeling is that it's the major uncertainty is there maybe perhaps for the next 1 or 2 weeks, because, the firms have been very, very overcautious. So they are self-sanctioning. So as there is more clarity, maybe in the next, a couple of days or couple of weeks, then maybe this kind of panic perhaps would disappear and market will stabilize. But the stabilization is not going to happen, at a very low level, because all indications are that the stabilization, the price would be somewhere in the range of 115 to 125, even if, things are relatively calm, say in the next few weeks or months. So we have to now work out all those calculations somewhere between, so around 120 figure for the next year, because earlier in the budget figures are between 17 to 75. So it means we have to revise our estimates for inflation. We have to revise our estimates for fiscal deficit, and that would also perhaps would affect our growth numbers.
Yes, absolutely. So it is going to, and of course, we're also likely to see an increase in the interest rates by RBI as well at this point in time. But moving a little bit now to the slightly broader implications here on a more global perspective, because the sanctions that were put on Russia or are being put on Russia are meant to hurt the Russian economy. That, of course, will have its own ramifications. But after a point in time, these kind of sanctions end up hurting other economies, including the countries which have imposed them as well. And that has its own ripple effect. How do you see that aspect playing out? Because we don't even know even when and if this entire situation stabilizes. Will those sanctions be lifted? When it will be lifted? And the longer it stays on, obviously, that impact will be even more disastrous.
Because in any kind of scenario, actually, you can think of now, I think sanctions are going to be there for quite long. Because, once President Putin has started this operation, he's not going to wind up quickly. And so even if there is a regime change in Ukraine, and everything but the Western sanction, most of these sanctions will continue for a longer period of time. So everybody has to adjust to that. But the problem is there are so many, when you disrupt an economy, which is a major energy producer and exporter, is also major commodity producer and also major arms supplier. So you are going to disrupt, so many other issues, so many other markets. So already we are seeing in the energy market, in the commodity market, in the food market, all those kind of impact, which we are seeing now. But there are also unintended consequences for everyone now. So the West, perhaps they didn't think, they thought that, they'll be able to save energy trade, at least, because Europe, as you know, is very much dependent on Russia. But that hasn't really happened because, even if the energy trade is continuing between Europe and Russia, but at the same time, the prices have gone up, the uncertainty has gone up. So everybody is going to feel, unhurt. If you look at the latest, projections or latest assessments by the IMF, the next couple of months are going to be extraordinary uncertainty in the global market. So the global economy, which was just coming out from the pandemic, now you have another major disruption. So this is actually a very, very serious setback to everyone, because it's not just only Russian economy which is in chaos now, because all firms are exiting, but at the same time, there are larger implications because, our companies have also bought assets in Russia, particularly the ONGC, etc. So their assets will also go down. Similarly, some Russian companies like Rosneft, etc., they have also invested in India. So what's going to have its impact on their long-term prospects of those companies and how they are going to deal, what kind of sanctions they will face. And similarly, particularly the arms which we have bought from Russia or which we are going to buy, how we are going to pay, what kind of sanctions, how Americans are going to have, their attitude toward this. So, there are a lot of uncertainties. So the major, we thought that, these are very comprehensive kind of set of sanctions. I think that perhaps the first time you have this kind of setup of sanctions against a major country. We had these kind of sanctions earlier also against Iran, against Venezuela, etc. But those were relatively smaller economies. Of course, they had the major oil producers, but the Russia is also commodity producer. Russia is also a major geopolitical player. So Russia would retaliate So we do not know how Russia is going to retaliate after this, because they did retaliate after 2014 sanctions. Now, yes, I mean, yesterday Americans are saying that, we will not import. There are discussions of not buying oil from Russia, but, America doesn't buy much oil anyway from Russia. So it's basically Europeans, those who buy, and Europeans hasn't really spoken much, because at this point of time, yes, in the long run, they will diversify. Both Russia would also diversify and Europe would also diversify. But here we are talking about, short to medium term. The diversification doesn't happen overnight. But yes, in the medium run, I think with the Asian economies, and particularly the Chinese economy, which is going to benefit, because all the oil which is going to be spared from or diversification away from Europe, that will come to Asia. And already they have pipelines. They have more pipelines in planned. So it means India also have to link more seriously toward those options, because yes, there would be diversification. Can we benefit? And that diversification is also perhaps in the short run affect negatively many Asian markets, because a lot of LNG, all the disruptions or diversion from Asian markets toward Europe, if they buy less from, because Russia has been supplying to Europe, but
right.
in the last few months, supply has been relatively low. But their supply to the Chinese market has actually gone up beyond their contracts. So, so we have to work out now all these issues. How do we depend? Which are the countries we need to depend now more in the coming years? And what are all the geopolitical implications? And of course, I mean, at the moment, we are less worried because we are not dependent on the Russian oil and gas. But what is happening in the Russian market is affecting everybody, and particularly those countries which are dependent on the outside energy sources.
Yes, absolutely, Professor. Very relevant points that you've raised and explained at this point in time. Thank you so much for joining us with your perspective.
Thank you.